Hey everybody, welcome to week 62 of the Ag Commodity Corner Plus podcast. And today is the 12th of June, 2026. More big week in the markets. What are we going to talk about?
USDA June crop report was neutral, plus HRW production the lowest since 1965. So let's get into it. I like doing this weekly summary chart. Remember, technically, a weekly close is more important than a daily. Why am I losing my audio? If you find that I'm having issues with my audio, just turn up your volume. But you can see here corn. I highlighted corn because that's a new low for the year. We put on 50 to 75 cents. We gave it all back. I think this is a fun selling technical reason only, not fundamental. I think it's wrong. If you look at the long-term forecast, we've talked about it. I think we could hit the lows in June. So if you're a buyer, livestock producer, this is a great opportunity to manage that feed risk. Oats, basically tagging along the corn's being an anchor on oats. Meal, also another buying opportunity. Not quite a new 26 low, but retesting some of the lows from 2026. I highlighted wheat because if wheat's trying to rally during harvest, that's the silver lining. It typically does not do that. Hogs also hit close to the 2026 low near 94, but it closed the week up from the lows at 97.45. So maybe some light at the end of the tunnel with the hogs. Crude oil down 617, new low for the week. And technically that's breaking lower. We'll talk about that and why. And silver, new closing low for the year. We talked about the break here. We caught the highs. We said this is parabolic. It won't last. And now we're doing the exact opposite. So let's get into it with the USDA crop report.
Yeah, the June USDA was released this week, and not a lot of changes for the U.S. balance sheets. A bit of a juggling act as far as the old crop balance sheets are concerned. So in corn, old crop exports were raised by about 25 million, and that was offset by a cut in ethanol by 25 million. Old crop soybean exports were cut by 20 million, and crush was increased by 20 million. But the bigger news was in the wheat numbers. So USDA did cut HRW wheat production again, and this time it goes to 497 million bushels from last month, which was at 515. On the global balance sheet, USDA's estimate of 2026 global corn stocks came in above expectations, as you guys can see there on the screen, whereas soybeans was lower and wheat was slightly higher. And on the South American side of things, a bigger than expected increase as far as the Brazilian corn crop is concerned, up by 3 million metric tons, which is higher than expected. On soybeans from Brazil, no change as far as corn is concerned. From Argentina, raised by 2 million metric tons. Soybeans also higher more.
So let me go back to the first chart. This was a disappointing report, but it historically it's not market moving, and most know that the USDA sometimes just does nothing with these reports. They upped the corn export for 25-26 old crop, but offset it with lower ethanol. They upped old crop 25-26 soybean crush, but offset it with lower exports. So at the end of the day, it did nothing. This number here for hard red winter wheat, I think is still too high based on everything we know. And I think it has to go lower. We're down from 804 from last year, and it's the lowest since 1965. But we've talked about this in past podcasts. I think the abandonment's through the roof. There's even 1,000 acres planted in South Dakota. 200,000 have to be abandoned because just the same old reasons, just a tough year between the drought and stress and disease and cold weather and frost. And then we've got, so what really happened with this report, it was sort of neutral to slightly bearish because the global numbers sort of offset some of the higher domestic numbers per se, including in wheat. This higher wheat number basically offset that lower 18 million bushels in HRW crop. And then, of course, we had higher numbers from South America, which also helped increase the global numbers.
The other big news, and we've been waiting for some sort of a resolution to the war that's happening in the Middle East. There's headline news of a signing on a peace deal between the US and Iran in 2 days. At least that's the headlines. The White House signals optimism on potential Iran agreement, but there are key questions that still remain. Washington and Tehran say they are close to reaching terms despite conflicting reports on the details. A White House official said 60 days of further negotiations would follow.
So you can see we've talked about crude time and time again. We created that bullish uptrend channel, and we're finally breaking below it. And that is bearish. I don't know if I believe Trump. We'll have to wait and see because we've been down this road and we've seen this movie before. I'm hopeful that he's telling the truth, but it's hard to believe after all this back
Come on,
and
Mo,
forth.
he's a man of his word, isn't he?
Well, trust in Trump, right? Haven't heard that in a while. Maybe he's going to do a taco. Anyways, we've said this. Don't chase diesel. Don't chase fertilizer. You'll get it cheaper. And guess what? We're going cheaper. Next target on diesel or crude is probably in that 70, 75 because you got the summer driving season. So that helps drive some of that demand. Yeah, let's talk about this SpaceX.
Oh, yeah. Big news today. So the much awaited SpaceX stock opened trading today. And it opened at $150 US, and the ticker for that is SPCX. And this was following the biggest initial public offering ever. The stock jumped 19% to close at around 161, which puts the valuation of the company at 2.1 trillion. The high price for the day was 176.52, and there were more than 500 million shares that traded hands, which approaches the biggest ever, which was by Facebook, and that was 580 million for Facebook back in 2012. And guess what? Elon Musk becomes the first trillionaire in the world on his combined stakes in SpaceX and Tesla. But a warning note for some, the only profit-making part of SpaceX is Starlink satellite internet division.
Yeah, so this company is made up of rockets and going to space and the moon and maybe Mars, and they're going to put a data center on the moon. Do you know that the CEO of NVIDIA said that a data center costs $50 billion, but it generates $300 to $400 billion in revenue? We should all come together and invest our money into a data center because I think that's the only thing that we all work too hard. We need to work a little smarter. But anyways, I digest. Stay away from SpaceX. Don't chase it. It's 4 times more subscribed. I'm actually surprised that it didn't open up higher. I thought it was going to maybe get closer to 185 or 200. But understand how this works. When SpaceX, a $2 trillion company, is being listed on the NASDAQ 100, this is your top 10 NASDAQ 100 companies. And it's based on weighting. And you can see in the videos at the top. Google actually has 2 on the index, so the 2.4 actually is closer to 8%. But what I'm getting at is because this is an index and index fund managers need to mimic this index, when you are adding a SpaceX worth $2 trillion, they need to make room for that. So they got to sell all of these to make that room, and that provides a buying opportunity. So for example, Micron about a week ago was down to 840. Today it closed at 1,000. That was your buying opportunity, okay? This is a chart that shows you what happens with IPOs, most of them, not all of them. First day, up 30%. Guess what? SpaceX is up 29, 30%. Following that hype, months later, as much as 15 to 16 months later, down 60%. So you could see it right back to that IPO price. And it's not until after 27 or 36 months that the stock starts to turn. So I think you'll get a better buying opportunity down the road. It also includes, so SpaceX includes the rockets, the data centers, AI, and expected to make trillions down the road, like long term. So interesting to watch. Don't forget to try our program. Join the marketing club. We got the app. We got this week's pre and post June crop report game plan. Guys, you can sell here. You can be disappointed in corn. You can complain about the fund selling, and you can go ahead and you're going to have to make a decision. If you have a July basis contract, are you going to roll again at the lows, take a risk? Or are you going to just most guys are just going to fold because they need the money and move on with life. But I think everybody's making a mistake for one reason. Remember Chinese demand. Okay, let's move on to this worst start to June in corn futures in 50 plus years.
Let's look at the corn futures chart. Old crop, this one's the new crop, but old crop July corn futures are off by 75 cents since early May and trading at 4.1275. New crop is trading close to that 440.
I think the lows in corn will be in the month of June. There's been years where corn can trade, I forgot to pull up the chart, but can trade by the end of June, hit a low, and then by fall could be $6. How can it be $6? I just explained it to you, called the gorilla in the room. So I'm not interested in doing anything down here.
The U.S. drought monitor shows the Midwest D0, D4 conditions at 48.10, and that compares to 50.9 last week, and also compares to 19% as of May the 5th. So quite a bit of expansion in that drought in the Midwest. 75% of the U.S. is in a drought versus last year when it was 48%. The next 2-week forecast for the Midwest has regular rains but colder temperatures. As of now, yield potentials are still intact, but there's a drought that seems to be creeping and could be a problem down the line, Mo.
Talking about yields, I just want to go back to this corn chart. The market right now, based on this price, is factoring in a record crop. They are so confident that the crop is in the bin based on this non-threatening weather. They're forecasting a 187. I think they're wrong because it's not over. It's over when you get to July 4th. So this chart here is trying to show you the soil moisture, or top soil moisture in the U.S. Corn Belt. A week ago or so, June 2nd, it was very dry. It's improved because we've been getting all these rains. This is one of the top key indicators of whether you're going to get July heat and do some damage during that pollination stage in corn. The other key factor is see this reverse C here? Right there. You got some cool waters there, but also some warmth that is trying to enter that. If this warms up over the next 3 weeks, what you're going to get is high pressure ridge, heat domes centered around Oklahoma. The U.S. plains is in trouble. I know they've been getting some rain. We've improved the drought a little bit, but they need 20 inches of rain. We talked about this in last week's podcast to fix this drought. If that water gets cooler in the next 3 weeks, where you start to see a reverse C that's all blue, This will be situated over the Midwest and cause a lot of problems. So we're not out of the woods with weather. It's still a wild card.
As far as the U.S. Climate Prediction Center is concerned, El Nino is officially upon us, and this is as of June 11, 2026. And they say El Nino conditions are present and expected to strengthen into the northern hemisphere winter of 26-27. According to European climatologists, May was the second warmest around the globe on record, only compared to 2024 due to a European heat wave and the El Nino.
Remember, El Nino, they've been talking about this super strong El Nino for some time, but it's not going to be the dominant factor for the summer growing season. I think it comes in later, closer to that fall, September period. So be careful what you believe in the media, because I think this is still more of a La Nina neutral pattern, although they've decided to call El Nino as of June 11th. I still think it poses a problem later in the growing season.
This is a chart of urea FOB, and the US urea FOB Gulf prices have been collapsing down about 81.2%. US retail prices are still high, but rolling over.
Yeah, we've talked about this again. Don't chase 27. Your U.S. urea retail price is closer to 800. This is closer to 400. But it just takes time for that retail price to come down. So again, no need to chase, no need to panic over 2027.
Let's look at the livestock side of things. There's headline news of 7 cases of screwworm in the U.S. and that has caused Canada to close its borders for cattle movement. Same case with Mexico for cattle imports from the U.S. Experts warn that a large outbreak could cause $1.8 billion in damage and devastate wildlife in the U.S. A bit of a nightmare situation for the U.S. cattle industry, Mo.
Yeah, we talked about this in last week's podcast. This is bullish long-term cattle. Remember this. This is a wow moment for me. In the 1960s, when they eradicated screwworm, they had sterile fly facilities. Do you know how much they needed? 96 billion flies. You think they have 96 billion flies right now to eradicate? And it took 13 years. This is a major problem.
Finally, we had the latest CFTC update, and as you guys can see there, it's a continuation of selling from last week. Corn heavy selling to the tune of minus 120,000 contracts, flipping the net long position to net short, minus 5325. Selling in soybeans, minus 65,000, taking that net length down to 90,756. Selling in all the wheats, canola, we saw some rare buying, compared to the other grains. So up by 583, taking that net length to 62,219 more.
Yeah, so I guess cotton, canola, and oil are holding up. They did a big selling in meal. We showed you the drop at the beginning. Obviously, a big drop in SRW. Holding, I guess, after this week's performance in real time, I think HRW is kind of flat. But still relatively long. I'm disappointed in this drop here. I'm going to guess there's still long, a big chunk, but they've taken most of that length off the table for now. So, like I said, I think this sell-off is a mistake. It's wrong. And I think this thing can quickly change in August, September when that Chinese demand shows up. Well, that's it from us, folks. Take care. Have a great weekend and be safe.
Bye guys.